Hello students, my name is Munawali and I am an ACCA professional level student. This lecture is on IFRS 5 non-current assets held for sale and discontinued operations. Objective of IFRS 5. The objective of this IFRS is to specify the accounting for assets held for sale and the presentation and disclosure of discontinued operations. In particular, the IFRS requires assets that meet the criteria to be classified as held for sale to be measured at the lower of carrying amount and fair value less cost to sell, and depreciation on such assets to cease, and assets that meet the criteria to be classified as held for sale to be presented separately on the face of balance sheet, and the result of discontinued operations to be presented separately in the income statement. This IFRS adopts the classification held for sale, introduces the concept of a disposal group being a group of assets to be disposed of by sale or otherwise together as a group in a single transaction, and liabilities directly associated with those assets that will be transferred in the transaction. Classifies an operation as discontinued at the date the operation meets the criteria to be classified as held for sale or when the entity has disposed of the operation. An entity shall classify a non-current asset or a disposal group as held for sale if its carrying amount will be recovered principally through a sale transaction rather than through continuing use. Held for sale classification. In general, the following condition must be met for an asset or disposal group to be classified as held for sale. Management is committed to a plan to sell. The asset is available for immediate sale. An active program to locate a buyer is initiated. The sale is highly probable within 12 months of classification as held for sale, subject to limited exceptions. The asset is being actively marketed for sale at a sales price reasonable in relation to its fair value. Actions required to complete the plan indicate that it is unlikely that the plan will be significantly changed or withdrawn. The asset need to be disposed of through sale. Therefore, operations that are expected to be wound down or abandoned would not meet the definition, but may be classified as discontinued once abandoned. Disposal group. A disposal group is a group of assets, possibly with some associated liabilities, which an entity intends to dispose of in a single transaction. The measurement basis required for non-current asset classified as held for sale is applied to the group as a whole, and any resulting impairment loss reduces the carrying amount of the non-current assets in the disposal group in the order of allocation required by IAS 36. Measurement. The following principles apply. At the time of classification as held for sale. Immediately before the initial classification of the asset as held for sale, the carrying amount of the asset will be measured in accordance with applicable IFRS. Resulting adjustments are also recognized in accordance with applicable IFRS. After classification as held for sale, non-current asset or disposal group that are classified as held for sale are measured at the lower of carrying amount and fair value less cost to sell. Impairment. Impairment must be considered both at the time of classification as held for sale and subsequently. At the time of classification as held for sale. Immediately prior to classification an asset or disposal group as held for sale, measure and recognize impairment in accordance with applicable IFRS. Any impairment loss is recognized in profit or loss unless the asset had been measured at revalued amount under IAS 16 or IAS 38, in which case the impairment is treated as a revaluation decrease. After classification as held for sale, calculate any impairment loss based on the difference between the adjusted carrying amounts of asset, disposal group and fair value less cost to sell. Any impairment loss that arises by using the measurement principle in IFRS 5 must be recognized in profit or loss, even for assets previously carried at devalued amount. This is supported by IFRS 5, BC 47 and BC 48, which indicate the inconsistency with IAS 36. Assets carried at fair value prior to initial classification. For such assets, the requirement to deduct cost to sell from fair value will result in an immediate charge to profit or loss. Subsequent increases in fair value. A gain for any subsequent increase in fair value less cost to sell of an asset can be recognized in the profit or loss to the extent that it is not in excess of the cumulative impairment loss that has been recognized in accordance with IFRS 5 or previously in accordance with IAS 36. Non-depreciation. Non-current asset or disposal groups that are classified as held for sale shall not be depreciated. Balance sheet presentation. Assets classified as held for sale and the assets and liabilities included within a disposal group classified as held for sale must be presented separately on the face of the balance sheet. Disclosures. Description of the non-current asset or disposal group. Description of facts and circumstances of the sale and the expected timing. Impairment losses and reversal if any, and where in the statement of comprehensive income they are recognized. If applicable, the reportable segment in which the non-current asset or disposal group is presented in accordance with IFRS 5 operating segments. Subsidiaries held for disposal. IFRS 5 applies to accounting for an investment in a subsidiary for which control is intended to be temporary because the subsidiary was acquired and is held exclusively with a view to its subsequent disposal in the near future. For such a subsidiary, if it is highly probable that the sale will be completed within 12 months, then the parent should account for its investment in the subsidiary under IFRS 5 as an asset held for sale, rather than consolidate it under IAS 27. However, IAS 27 still requires that if a subsidiary that had previously been consolidated is now being held for sale, the parent must continue to consolidate such a subsidiary until it is actually disposed of. It is not excluded from consolidation and reported as an asset held for sale under IFRS 5. An entity that is committed to a sale involving loss of control of a subsidiary that qualifies for held for sale classification under IFRS 5 shall classify all the assets and liabilities of that subsidiary as held for sale, even if the entity will retain a non-controlling interest in its former subsidiary after the sale. Key provisions of IFRS 5 relating to discontinued operations. Classification as discontinuing. A discontinuing operation is a component of an entity that either has been disposed of or is classified as held for sale and represents either a separate major line of business or geographical area of operation, and is a part of a single coordinated plan to dispose of a separate major line of business or a geographical area of operation, or is a subsidiary acquired exclusively with a view to resale and the disposal involves loss of control. Income statement presentation. The sum of the post-tax profit or loss of the discontinued operation and the post-tax gain or loss recognized on the measurement to fair value less cost to sell or fair value adjustment on the disposal of the asset should be presented as a single line amount on the face of statement of comprehensive income. If the entity presents profit or loss in a separate income statement, a section identified as relating to discontinued operation is presented in that separate statement. Detailed disclosure of revenue, expenses, pre-tax profit or loss and related income tax is required either in the notes or in the statement of comprehensive income in a section distinct from continuing operations. Such detailed disclosure must cover both the current and all prior periods presented in the financial statements. Cash flow statement presentation. The net cash flows attributable to the operating, investing and financing activities of a discontinued operation shall be separately presented on the face of the cash flow statement or disclosed in the notes. IFRS 5 prohibits the retroactive classification as a discontinued operation when the discontinued criteria are met after the balance sheet date. Disclosures. In addition to the income statement and cash flow statement presentation noted above, the following disclosures are required. Adjustment made in the current period to amount disclosed as discontinued operation in prior period must be separately disclosed. If an entity ceases to classify a component as held for sale, the results of that component previously presented in discontinued operation must be reclassified and included in income from continuing operation for all periods presented. This lecture is presented by Munawar Karim Khan. He is an ACCA professional level student. This lecture includes extracts from relevant IAS IFRS. If students have any problem in understanding IFRS 5, kindly contact munawarali88@hotmail.com. Thank you, bye bye, and take care.